Hey, today is Monday evening, May 13th, 2019. Taking a look at the S&P 500 and ES as we get ready to trade Tuesday. Here is ES right now. We're we're at 6:30 Eastern time. So futures have been open for Globex about a half hour at this point. You can see that right out of the gate we took a peak below 2800. So that seal has officially been broken. You can see over here during the day we tried, holding an edge along above 2800, but right out of the gate they opened and flushed us down below. So probably all it's going to take is for Asia to open and some feelings to get going from over there, and some sellers to step in and probably take a move down under 2800 tonight, maybe looking for an open below 2800 tomorrow. So it is what it is. We thought maybe today, maybe we were showing some support there to hold 2800, and maybe it still will be. Maybe this is just a little gap below. There is a pretty, there's a little bit of a buyer here at 2801, but that's not really of much size. It's early. We'll see how the evening rolls on from here. Looking at some other indicators. Oh, one other thing that's an indicator on that chart back here is oil. Oil has started trading for, actually this has been going on since early this afternoon. Actually, even in the maybe even since the AM hours today, trading below this 60.95 level. That was a swing low set at the beginning of the month, and you can see we've really sort of stuck it out here below that with a lot of candle closes here. So that is a bearish tell to the health of the underlying health of the market. The 10-year futures have traded up to a 20-day high. So it's popping out a price bubble like this because this is a 20-day chart. Trading up over 124. And the VIX today got up to well into the 19 handle. Not quite as high as this 2050 that it printed last week, midweek around Thursday when we took that first big tumble on Thursday. But still trading very elevated. I mean, anything above 16, things start getting shaky. But if it can't take a move back above 20 again and starts to move down, maybe that's going to be an underlying sign that the selling has sort of abated for the time being. All right, so let's get on to our S&P 500 charts. Okay, here's our simplified chart. This chart focuses on this measured move. It focuses on these gaps, and it helps you focus on the simple moving averages. Right now, our 10-day simple moving average has been in a sell signal now for about 2 sessions. On Friday, they tried to counteract this sell signal, but today we got the gap down open. And not only that, but we got the gap down open below the 50-day simple moving average. And when you roll the chart sideways here, you can see that we haven't had an open or a close below the 50-day simple moving average since all the way back here in January. And this last close was, at the end of a rally. It closed above the 50-day, and then the next day did a huge gap up open. While we're over on this side of the chart, let's take a look at this measured move that really played out and helped us sort of calibrate where we were going at the beginning of the year. We took a measured move from the low that was made on December 26th to where the market closed on on December 31st. So we took that one big move and took it and looked at where it would double up. So if people came into the year and would only buy above where we closed on January 31st, taking it up and doubling up that same move that the people made who bought the dip back here the day after Christmas. And you can see that this kind of worked in conjunction with this move above the 50-day, this gap up open, and then we closed back above this 2668 level, this doubling up, this measured move, but then backed off of it. And then we looked above it again and backed off of it. And then here there's a white arrow above this day. This was the FOMC meeting. So these white arrows on the chart are always placed there for something regarding the Fed or non-farm payrolls number. And so here was the January Fed meeting. They paused. They put out that much more dovish statement, and we rallied from there on out over this level, this 2668. So I just wanted to show you that, to show you how these measured moves can really work well, and showing us, you know, um, a place where price might be going. It might hang out for a while and decide what it wants to do, and it might head down even lower, or we might hold this and move on up. But in any case, our measured move that we're looking at now is from the all-time high to where the 50-day simple moving average was when we first looked below it. And then, of course, today we've really 50-day, leaving this huge gap till Friday's close to go along with the huge gap we left last week. Was this Friday, Thursday, Wednesday, Tuesday, Monday? Yes, it was between Monday's close and Tuesday's open. We had this huge gap down, and this gap down was in conjunction with a gap down below the 20-day. And today's gap down was in conjunction with a gap down below the 50-day. So what's going to happen next? Are we going to come in and do a gap down below the 200-day and maybe just make a little bit of a move down, maybe tag the 100-day, sort of overshoot this measured move and take it back up? Are we going to get some news that takes us even lower still? If we are going to move even lower than just this idea here for this measured move, then we should probably be looking at this 2668 level, which is where the whole thing started, and what I was just talking about back here, because this was a Fed-related breakout point in conjunction with the move above the 50-day simple moving average. Okay, so that kind of is starting to make sense with things that are going on now. You know, people are wondering whether the Fed is going to stand this line, claiming that, there couldn't possibly be any rate cuts. The market really wants the Fed to start. Maybe if they keep stalling on that idea and just keep saying, transient inflation and patience and stuff like that, the market's going to get pissed. And we're going to make that push down here all the way to this, and revisit this 2668 level. And that would be more like a triple down, that you could see this box to this box, and then one more box down would probably get us, around to this 2668 level. But in any case, for now, let's just focus on making this measured move here and seeing what happens. This would be a move down to around 2763 to 64, in between the 100-day and the 100-day and the 200-day simple moving average, and a doubling down from the all-time high to the break of the 50-day. So that's what that move is all about. Okay, and then let's go to our final chart, our more complex roadmap. Okay, so here is our move down today, and some things that we traveled through. We filled yet another gap today that was left over from back here. We're intermingling with the levels that we were trading on the day of the Lyft IPO. Very interesting, because Friday was the Uber IPO. This measured move idea that I'm pointing to on the other chart rhymes with the halfway back from March 11th. March 11th was this big breakout day here, of a gap up open. If we overshoot this measured move target and overshoot the 100-day, there is a little gap here that is involved with this gap up open from March 11th. So those are some ideas there. Want to talk about the simple moving averages before I end this video as well. So we've got our 10-day that has curled over and crossed down through the 20-day simple moving average. Now we also have the 20-day curling over. In a couple of more sessions, if we keep on selling, the 10-day simple moving average is going to come to terms with meeting the 50-day. And when we get across of the 10-day down through the 50-day, now that starts to get to be a little bit more strong of a sell signal. So this is either going to be the catalyst that pushes us down to break this measured move idea and move all the way down here to 2668, or it's going to be the ultimate oversold thing that the market is going to, interpret it as, and it's going to produce a bounce for us. And if it produces a bounce for us, we have to, within the next couple of sessions, regain this 50-day simple moving average. If we flush down, we reverse up, and come back to the 50-day and fail it, that is going to be an excellent short entry for that further move down lower, because I can pretty much guarantee you, based on what I've watched over and over through the years, when we are in a sell-off and we reverse, if we do not recover the 50-day simple moving average, that is a spot where we reload short, and we usually come back and break the previous low and head down lower. So even if we don't trade any lower than we did today, if that little move we're seeing in futures right now is just an aberration, and we never look below 2,800 in the light of day for now. If we turn and we move back up and fail to recover the 50-day on a closing basis, that's where we're going to be reloading short for this move down here to this 27.63. And if that goes, maybe the 100-day, and if that goes, we've got these gaps all the way on down till we get to 26.68. Okay, so I hope that all makes sense. If you have any questions, just send me a direct message. And I also want to talk about one more thing too. Those 29.50 calls that are a trade for when we eventually take care of this level from ES. Let me make sure, where's my ES chart? On ES, we made our all-time high on ES. It was 20 days ago. It's not going to be on this chart. On ES, it happened during the course of the day, like in pre-market. Okay, so it didn't happen in the light of day with the rest of the market. Here it is, 27.61.51. This happened. In fact, this happened in the evening. It didn't even happen in pre-market. I think it happened around 11 o'clock at night on the 30th. And then the next day we made our all-time high on May 1st, but we never made that complete high equal to what ES has done. So this is always going to be sitting out here, and it's going to be something that gets resolved. Is it something we're going to resolve by monthly OPX this week? I don't think so. I think the time has come and gone for that. As of Friday, when we were trading up to when we were trading all the way back up here to 28.90 to close out the week, that looked like it was still a possibility. But the shakeout that happened with Kudlow making those comments on the Sunday shows, and then Trump following through today with his rhetoric, has kind of shaken the market out a little bit, and it really does not look like that's going to happen this week. But if you've been hedging those as you go along, to your own liking, to your own risk profile, and if you don't want to hedge, if you can't hedge, at least just take that trade in a small amount by buying one or two of them. And that trade is to buy 29.50 calls when they get to a $5 window, and they will trade to a double when we resolve 29.61.25, provided that happens before this contract expires, because once this ES contract that we're in right now expires, the spread goes back to this weird thing where it's way ahead of S&P 500, and the trade won't be quite the same. But right now, while they're very close to par, I have a feeling that if it's not going to happen for May OPX, it'll happen for June OPX, and it'll happen a week before OPX, because that's when the ES contract, next contract expires. It expires, or it rolls over the week before monthly OPX for the S&P 500. So not this week, but sometime maybe in another week or two out from here, up to maybe 3 weeks out from here, that move should happen. And if you want to buy those 29.50s, stick to the Friday expiration. And if you want to buy them, this far out of the money now, for a bet that maybe it'll happen this Friday at the end of the day, I don't think so. If you want to start looking at it for the Friday after this one, Friday of May week 4, start doing that. But in any case, don't pay more than $5 for them. If you do pay that full $5 freight for them, make sure and hedge them by selling something short against them into these rallies up that fail, especially if we fail against the 50-day, or if we come up and we fail against the 20-day simple moving average as we move out and above the 50-day. Okay? And if you have questions about that, just send me a direct message. Okay, have a great rest of your evening. I hope this video helped you out and get you going for a better start tomorrow. Thanks. Have a great evening.